Deja vu. I don't know if we want to see 2008 again, but does it feel reminiscent in the bonds and stocks?
Well, I guess it does. I think this time round, investors will be looking for how much Asia has changed in terms of its reliance on its domestic consumer. That will be the big difference. Over the course of the last few years, Asian economies have been, to a certain extent, rebalancing towards domestic consumption, and that's going to be the big test at this point.
Domestic consumption. We don't have decoupling yet, though.
No, we don't, but if you look at some of the research that we're publishing right now, RBS published a piece on the Thai hospitality sector this morning, and those companies are much less reliant on Europe than they were 3 years ago. Countries like Russia, India and China becoming much more important, and that's the sort of theme that investors will be looking for this time around.
Are you saying, Jim, that if we see a double dip, say in Europe, let's say Europe goes into recession and then maybe a double dip in the US, Asia will still do okay?
No, Asia is not exempt. If you look at countries like Korea and Taiwan, a lot of the companies there are very dependent on the US and Europe. Tech companies, auto manufacturing, for example. However, you look at other countries such as Malaysia, such as Thailand, Malaysia banks, for example. We got a report out this morning talking about the fact that those companies are much less dependent on Europe than they were 2 or 3 years ago. So that will be a major test this time around, and investors will be looking for those stocks which are least exposed to Europe and the US.
Yeah, what is the baseline expectation from RBS right now? Because Europe is not looking good, considering we had a 5% sell-off overnight. I mean, bond yields for the Greek 2-year at 50%. You get half your money back. Yeah,
I mean, I guess in terms of what we're looking at, our main concentration is Asia. China is an economy we are still fairly optimistic on.
Yep.
We feel that the Chinese authorities have got a lot of tools for manoeuvring their economy. If you look at Europe, you look at the US, there's really not much ammunition left. So I think investors will be looking to China as the potential for actually getting us out of this mess.
Do they have that potential to get us out of this mess? I mean, we're seeing inflation being stubbornly high in China.
Yeah, inflation's creeping up, but be mindful that China has a very strong balance sheet. China owns a lot of companies, government has big holdings, and that huge amount of capital accounts it's got is something which it hasn't actually flexed right now.
Okay, but if you're expecting one country to bail out the rest of the region, that's going to be a tall order, don't you think?
It's going to be a tall order, but I mean, be mindful that China has got policy instruments available to it that those other countries just don't have.
And what about those that say that China doesn't really have that much, you know, in terms of leverage right now, leeway, because they have to deal with inflation in their country. They don't want to slow growth down too much, right? Because they have to deal with 1.3 billion people that most of them want to get out of poverty. And then what about the property sector? I mean, they have their own headaches to deal with.
Well, there are all sorts of problems there, but at the same time, you've got inflation of 6-7%. But look at wage inflation in China. Wage inflation has been up to 15%. So the government has been trying very hard to put money back into the population to allow the domestic consumer to actually take more ownership of the economy itself.
Okay, so, you know, we had a sell-off in Korea yesterday, down 4%. Taiwan, again, these cyclical markets, right? In these times, where do you think the best bet is, the best place to hide for safety?
Well, I think we'll be looking for stocks which have got that big exposure to domestic economies. Now, take Thailand, for example. You've got CPL, for example, which is a 7-Eleven franchise, and it's going to be fairly insulated, we think, to external events like the US and Europe.
And the Malaysian banks you mentioned before?
Yeah, Malaysian banks, again, we've got a report out this morning which is talking about the exposure to Europe relative to 2008, and we think it's gone down materially during the last 3 years.
And what about Indonesia? That was up. It was the only market to end up yesterday, considering the sell-off we saw across the rest of the region.
Indonesia's almost like a special situation. You've got a reorientation of GDP towards the domestic consumer. That's beginning to happen. A lot of wealth going back into the consumer through things like coal resources, for example. So again, there are areas of Asia where there are countries which have got more immunity towards the US and Europe.